Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today I'm going to be talking about Alaska Air Group stock. So this one came in by request a while back, and I have the ticker up on the whiteboard behind me to take a look at. But what happened was I was going through my big spreadsheet. I try to go through and update about 15 stocks each day, so I can get through. If I skip a day every now and then, like 50 a week or so is kind of what I aim for. And I was going through my regular updates today, and I updated Alaska, and I remembered it was on the board, and I thought, well, that's nice. I'll get this update, and then I'll go ahead and make a video. And then I noticed a comment in my spreadsheet, and then I took a look, and I was like, okay, this is worth kind of making a video on in itself a little bit. If you have a request you'd like me to take a look at, put it down in the comments. I'll put the ticker on the chalkboard. I replaced my whiteboard in the new studio with a chalkboard, and eventually I'll make a video. Usually I only post the S&P 500 stocks on the YouTube channel for free, and the rest are on Patreon. But I'm going to go ahead and post this one for free because it was just kind of interesting in its own right. As always, this is not individual investing advice, just how I analyze stocks. So the first thing I want to look at when I look at Alaska is, one, how much data do I have? So I have full 20 years worth of data on fast graphs. That's good. There are a lot of airlines that went bankrupt from 2006 to 2010-ish area in various ways. There's really only a couple that have a really long history. I can take Alaska all the way back to 1973 over on Y charts. And also Southwest, you can do that with as well. So the rest of them either have really shorter time frames, or they had some kind of, bankruptcy type of a thing that happened where the data just doesn't go back that far. So I like the ones that have a big set of data, because when you look at their earnings, you can see that they're deeply cyclical. So the earnings are this dark green area under the fast graph. Now, obviously, during COVID, this is like a weird event where people weren't traveling at all, so that's explainable. But we can go back to 2008, and we can actually see that in 2003 they were negative as well, even though we can't quite see it on the fast graph. So that was a recession as well. So during recessions, we should expect earnings to probably go fully negative or close to it. They stayed barely positive here, but they fell 95% off their highs. So, and we can see in 2018, which was actually an period of economic weakness, earnings fell 33% that year. But if you put two together, we have another 10. So, fell about 40%, even though we didn't quite get into a recession during that time. So when earnings are that cyclical and they move around that much, then fundamental analysis like PE ratios, PEG ratios, earnings yields, and growth, they aren't very useful, because usually, like if you went to the bottom here, I think this is actually going to be a good example. The PE, if you bought near the bottom, that's January 2009, the PE was 222, right? It looks horrible. That was the best time to buy, basically. But if you were at the peak, the PE was only 12 or 13, right? So you have to be this is the first thing I always check, is the earnings cyclicality, and we can see that even under 12 at one point, right, during the peak, right? But if you would have bought when it looked cheap, you would have lost a lot of money, or had to at least sit through a big downturn in the stock price. And if you didn't buy it because the PE was 200, then you would have missed out on a good buying opportunity. So what do we do then? Well, you can use really long-term earnings averages and just assume that they'll average that. That's one way to do it, but it's not a very precise way to do it. So I like to use historical price as my guide and say, well, if the market treated it this way when earnings fell 35% or 95% last time, then if they fall 95% again, which they did more than that in 2020, the market will probably treat it in like a similar fashion, right? And if they manage to recover back then and continue to grow earnings well, which they did, then they'll probably be able to recover, usually about 4 times out of 5. If you have a high quality business, they'll be able to recover pretty good, within 4 or 5 years. So it's not always the case. There's an art to it. It's not just a formula, but it's going to keep you from making the really big mistakes, like buying when it looks super cheap here, right, at a 10 PE, and then you hold during COVID, and it's down 70% or so. So I like to look at the historical price patterns once I know it's a cyclical business. So I go back in time. Let's see if I can do, okay, this goes back, this is via Y charts, and this is a drawdown chart. So it's how far off the highs that it is. And this is what I like to look at for cyclical businesses. So this goes all the way back to like 73, it looks like, or at least the 70s. And we can get some bigger patterns here. Now, one thing to remember when you go back this far in time is, especially if you looked at like Southwest, which also goes back, it was much smaller business back then. And so these businesses have grown over time. So what happened back here isn't necessarily going to be what happens again, but it lets you know what's possible, gives you an idea how cyclical the business it likely is, and how the market could treat that, controlling for some other things, right? So this is kind of the long-term picture, and we can see this recent decline. It's pretty similar actually to the deeper ones. This is probably oil crisis in the 70s. We have the mid-90s. I'm not sure exactly what was going on. It was a little shallower decline. But then we have recession, and then I'm going to post another chart, and this was down again, which is the one we can look at here. And that was probably down in the 60 percentile range off this peak as well. Now, the one from 1998 down was gigantic. That was probably some type of super cycle, right? We know it was the dot-com bubble. There were a lot of other things that were expensive too. So sometimes if I see this, I reset the time period to like 2003 in this case, and that would give you a better read on the 2008 down cycle. In this case, I'm actually going to go back and reset this here, because it's always measured off the peak. And if you get a really high peak like we had in 2018 here, it's probably some sort of big super cycle, then it can be useful to say, okay, well, maybe it's not going to go all the way back to like 2015 levels, but maybe we can get back to 2020 levels, right? And now you have these two peaks here to look at, okay? So you kind of have to use some judgment. Well, you don't have to use judgment, but I try to use judgment. So this is the since 2020 peak. That's going to be this one right here. So it's more conservative assumption. And it says, okay, all right, this looks like early 2017. We had this huge upcycle, right? And then earnings kind of started coming down, and then they started to recover. So it kind of lets you know it's probably not a permanent decline. And then COVID hit, and then boom, we get this whole other reset. So we could reasonably assume, and then we see the stock price retraced all the way back up there when the market got really excited, when, I don't know, the vaccines were out by then at least. But the market kind of sent these airlines, after they got knocked really down, up really quickly. That was kind of a false peak. But, I mean, Buffett sold his airlines, and people gave him a hard time because a lot of these airlines, he didn't own this one, but a lot of them rallied here. And it was a very premature rally, which we saw a couple years later. So he really wasn't wrong selling, I don't think, at the time that he did, but that's a different story. So if we use these peaks, which is what I'm trying to do here, we can see, okay, the crash, it fell quite a bit here, but then we have the secondary crash, which I think is more of a cyclical type decline. All this is kind of weird because of COVID and everything else, but this helps you get an idea that once it kind of starts recovering from here, and this is in line with similar declines of like that 60% range or so, that this could be kind of a bottom. And you can look at it over here. I mean, it comes down right here. It gets pretty close to the COVID bottom, even though earnings are doing okay. They're mostly on their path to recovery. So to bring this all together, I took a look at the stock as part of my regular update in August 23rd, 2024, which is right there because I had the date on my spreadsheet. Okay, I'm going into my kind of spreadsheet here now. And you don't really need to see any of this information. because I don't have much here. But the note I made was the important parts are I last updated it on August 23rd, 2024. And I left a note in my notes here that says, I'm considering adding a point, which is like a small weighting. There's a decent chance of a double if it recovers to pre-pandemic levels, which would be those 2020 levels I was talking about. And so I came along for my next update here this month. And then when I was looking at it, I was like, well, it basically did that from the very point that I wrote that. Now, what happened was, so they have some M&A going on with Hawaiian Airlines, which they're merging with, which I think over the long term is going to be really good. But it's not finalized yet. And I mean, if you haven't noticed that under the Biden administration, I mean, M&A has been really difficult for most businesses. Even the ones that should be no-brainers are taking forever. That'll probably be a big change when Trump comes in, I expect. Maybe not if it's like, Japanese steel trying to take over U.S. steel or something. But for a merger like this, I don't see any kind of issues with the new administration unless there's some sort of conflict of interest with their investments or something. But so if we go to August 23rd, which is right here, and then so the DOJ announced on this day, which I had forgot about. I mean, I remember when it happened, but I didn't really note it in my mind for some reason, that basically they were backing off, giving these guys a hard time about the merger. That's the summation. So then the stock started taking off, which kind of lets you know that usually, like when businesses merge like this, especially if you're the acquirer, a lot of times the stock price will fall. But I think everybody kind of recognizes this looks like a pretty good deal for these guys because they have kind of the whole West Coast to Hawaii, Alaska, Japan, that whole kind of area. They could potentially dominate that, I think, or at least giving them some pricing power. And so it looks like a pretty good deal, all things considered. But the stock is up 80% or a little more than 80%. Since I wrote that, which was just like a few months ago, like 4 months ago. So the long story short is I missed it. I saw it. I left myself a note. I probably wanted to look at it a little bit more. I mean, airlines are always sketchy to invest in, so I'm always a little bit extra cautious. And either what happened was I was going to look at it and think about it a little bit, and that deal was announced the DOJ decided to back off, and then the stock price basically went up. And I probably didn't want to try to buy it after that. So, yeah, I mean, the next week it had already gone up like 10%. So, but what I was looking at was this peak back here at, call it 70, right? And I was looking at the price on, what did I say, August 23rd, 35, right? That's a double. And I thought, hey, you could get a pretty easy double potentially out of this without getting too aggressive and assuming it ever gets all the way back up here. If it just gets back up here, which they're already earning about the same amount of money. And now next year's analysts. Can't really trust analysts' expectations in a situation like this. But anyway, the long story short is I missed this one, but I had identified it, and this will happen when you're investing. If you have a pretty good method, there's always going to be stocks that are on the edge that you kind of either you decide to lay off of, or you're a little too slow, or something good happens. That wasn't like a surprise necessarily. That was, you kind of could predict it, but either you didn't act quickly enough. Sometimes like hedge funds will come in and announce that they're buying things right before they get to my buy price, and then the prices go up, and then I never get it. That's usually the most annoying ones for me. I can handle this a little bit better. I mean, but again, it's similar. Like the DOJ, if they hadn't come in on that day, I get another week to look at it. I think about it. I could have gotten a double out of this one. So, but that's how it goes sometimes. Usually the ones that are on the edge, are difficult to know. I mean, if the DOJ comes in 2 weeks later, maybe I own this one and it's all good, but that's not the way it happened. But the good thing is the process was there and I could see it. And I know if I get 10 more chances, I'll get 7 of them, So that's my thoughts on Alaska. I wouldn't buy it here. I don't know how high it will eventually go. I wouldn't assume, I mean, it's kind of getting right up to where these other peaks were. If things go well and there's not any kind of like economic stress or anything, analysts could be right, and then you could be looking at these old highs again, right? Which is another 50%, we'll call it 50%. So a person could get 50% out of it if they do extra work, feel good about the economy for maybe the next 2 years. But I like to buy these when they're in a downturn, because we saw during the past regularly fall 60% off its highs. So when I buy then I know my downside is likely lower than if I buy now. I could literally lose 50% pretty quickly if the economy falters, if something else happens, right? And this is already a risky business. We've already seen a couple crashes this year. I mean, it's already a very risky business. So I always try to be careful with the airline stocks. All right, hopefully you found that useful. If you did, hit the like and subscribe button, leave a comment, leave a request, and I'll see everybody later. Bye.